You just found out you've owed sales tax in a state for years, and you assume paying everything you owe is the only way out. But if that state's never contacted you, there's a program built for exactly this situation, and it can cut what you actually owe. We've filed hundreds of these for sellers, and today I'm walking you through who qualifies and how it works. What I'm referencing is a Voluntary Disclosure Agreement, or VDA is a formal arrangement between a business and state tax authority. The idea is simple. The business comes forward proactively to disclose and pay unpaid tax liabilities before the state finds them first. In exchange, the state offers two meaningful benefits. The first is a penalty waiver. States automatically waive penalties as a part of a VDA. This matters because penalties on unpaid sales tax can add up to 25% or more of the underlying liability. So for a business with significant exposure, the penalty waiver alone can represent real money. The second benefit is a limited look-back period. Rather than requiring the business to go back and pay taxes for every year the liability exists, the state caps how far back they'll look, typically 3 to 4 years, aligned with the state's statute of limitations. For a business that's had nexus in a state for a decade without filing, the difference between a full look back and a limited one can be enormous. But is a VDA right for your situation? Here's where it gets important. Not everyone qualifies for a VDA, and the disqualifiers are clear. To be eligible, two things have to be true. First, you must never have been registered for sales tax in that state. Second, you must never have received any contact from the state. No notices, no questionnaires, no letters of any kind. If either of those things has happened, the VDA option is off the table. The path to compliance at that point is registering directly with the state and filing historical returns without the benefits a VDA would have provided. This is why it's important to read all of your notices and not ignore them. A notice that seems minor, something that could easily be filed away without action, can quietly disqualify a business from a VDA that could have saved them significant money. Most states that offer VDA programs waive penalties and cap the look-back period. Very few go further than that. As of the date of the recording of this video, Texas is currently the only state we've seen waive interest in addition to penalties as part of a VDA. And for sellers with years of liability in Texas, that interest waiver can be substantial. One important nuance though, the interest waiver in Texas applies to taxes that were never collected from customers. So if a seller collected sales tax from customers and simply never remitted it to the state, Texas does not waive interest on those amounts. But for sellers who genuinely never collected, which is the more common situation for businesses discovering a nexus exposure after the fact, the Texas VDA is particularly favorable. While a business owner can submit a VDA on their own, practically speaking, having a professional handle it is almost always the right call. And here's why. A VDA involves meaningful back and forth with the state. The application needs to be submitted correctly, the terms need to be reviewed carefully, and the returns need to be prepared accurately for the look-back period. When a VDA is on the table, the underlying liability is usually significant, which means the stakes of getting something wrong are also significant. Most states allow VDAs to be submitted anonymously through a third party, at least during the initial stages. This is actually one of the advantages of working with a professional. Terms can be negotiated without disclosing the business's identity until an agreement is in place. With all of this said, a VDA is not always the right tool, and no one should be selling you one if it doesn't make financial sense. If the liability in a state is small, a few $100s say, and the cost of having a professional prepare and submit the VDA is more than what the penalty relief saves, then a VDA is not the right move. In that situation, filing historically and getting compliant directly is the better path. The value of a VDA scales with the size of the liability. For businesses with years of exposure and meaningful dollar amounts at stake, it can be genuinely valuable. For businesses with minimal exposure, it can cost more than it saves. The question asked is simple. Does the penalty relief and look-back limitation justify the time and cost of going through the VDA process? And if the answer is yes, it's a powerful tool. If not, there are simpler ways to get compliant. But if you're a seller who is primarily selling on Shopify and Amazon, it's important to keep your sales tax data straight before you enter a VDA process. And for more details on that, check out this video. And remember, when in doubt, always consult with a sales tax professional.